Well, hello there. Eric Padden once again. And on this video, we're going to be talking about the fractional reserve banking system. And a lot of people don't understand the banking system and how fractional reserve banking actually works. In order to appreciate this, we've got to really go back to 1913, excuse me, when the Federal Reserve was introduced. Basically, Jekyll Island, a bunch of the bankers got together in secret and they created the Federal Reserve. And really, it's nothing more than a way for them to control banking and make sure to maximize profits in the industry. And nowadays, you've got Federal Reserve type banks all over the world, not just in the United States. But for this video, we're going to focus on the US dollar and how fractional reserve banking works. First of all, let me just say that when money is created these days, okay, it's not like the Constitution where it should be created through the Treasury without interest. The way money is created these days is that the Federal Reserve creates it out of thin air, taps a few keys in, boom, creates money, whether it's in the form of, a stimulus. There's been billions, actually trillions of dollars created recently in bailouts and stimulus, and what quantitative easing is them creating this money. Well, when they create the money, instantly, we, as American citizens, pay interest on the creation of the money. Now, this is amazing that they get away with it, but they've been pulling the strings and running the economies around the world. They're the master puppeteers that own these banks, going way back to the Rothschilds, Rockefellers, and so on. But bottom line, if you were to understand this, it would just blow you away. And luckily the internet is allowing more and more people to be educated, because you certainly aren't going to learn about this in school. You're not going to learn about it on mainstream media. But the reality is that that money, from the moment it is created out of thin air, we're paid interest on it. And that's where the majority of our federal income tax money goes. A lot of people have the impression that taxes are a good thing. It goes to pay off, schools and roads. Well, it doesn't. Okay, that's where your local and state income taxes might go, schools and roads. And that's one of the reasons all the states are struggling big time right now, is they're set up in a debt-based system that cannot work. Okay, just like our whole economy is debt-based, and most fiat currencies are debt-based systems that always crash eventually. Why? Because you always need to have new debt to pay off the old debt. You might be aware that Congress just had to raise the debt ceiling again in order for us to have the new debt to pay off the old debt. Okay, it's real simple. If you look at it like this, you might know someone who's struggled with debt. Maybe you've been in this position yourself, where you've got to use credit card B to pay off credit card A, and it starts to get up near the max of the limits. If you still got decent credit, you might apply for credit card C or credit card D. And if you've got decent credit, you'll get approved. And what will happen is soon you'll end up using credit card D to pay off credit card A. And you get in this vicious cycle where A, B, C, D are using one credit card to pay off another. In effect, you're using new debt to pay off old debt. Well, there comes a point where all the money you make from all the credit cards you can get, and your wages, and any money you can scrape together, all that money still doesn't pay the interest on the loan. Okay, when that happens, you go bankrupt. When that happens to a government, they go bankrupt. The system crashes. Okay, and this always happens whenever there's a fiat debt-based currency. So a lot of people believe we're in the last years of a lot of the fiat paper-based debt-based currencies around the world getting ready to crash. And I believe this is by design. They've been wanting this one world currency. They were working toward it in Europe with the euro. They're leapfrogging the whole Amero thing, where they were going to combine the Canada, US, and Mexico to Amero, and they said, forget that, we could just go and leapfrog that, and we'll create so much financial problems out there that the world will beg us for a solution, and we will give them this new currency. So I think we're on our way to that. How many years left the dollar has, who knows? I think that you should be getting out of paper currencies and into precious metals to preserve your wealth. But anyway, for the sake of this video, fractional reserve banking. So we now know that the Federal Reserve, which is no more federal as far as government than Federal Express is, it's a privately owned banking cartel. And what they do is they basically control the monetary system. They choose when to create money and when to give credit and cut off credit. They create booms and busts and depressions, and they've been doing this from day one. And once again, they cause the depression. Okay. We know that the excess liquidity the Fed created is what caused more recently the dot-com bubble and then the real estate bubble. I believe we're now in the beginning of a giant commodities bubble. But here's what's happening, unfortunately, behind the scenes. Whenever all this money is created, I don't care if it's for bailouts, stimulus, quantitative easing, whatever it is, that money from the moment it's created, let's use, the personal, maybe you can relate better to this. Let's say you and I go get a car loan or a mortgage for our home. It's not like that bank takes money in their own vault from other depositors and loans that money out to you. Okay, it doesn't work like that. That's the impression that most people have, that the banks take money in from other depositors and then they go ahead and loan it out and they make the spread, right? It doesn't work like that. Bank is much more profitable than you can even imagine. It's amazing that these banks need trouble, but it's all by design because the big banks want to buy up all the small banks until they can create, just giant monopoly. And so anyway, they're well on their way to that. But here's the point. When you do your signature to create the mortgage, that money is not taken from their vault and loaned out. That money is then created out of thin air. And so your signature is what creates that money. The bank doesn't have it. The bank doesn't give it to you. Your signature creates it. They tap that in. Now, fractional reserve banking means that let's use $100,000 for a round number. Okay, you've got a $100,000 home, you've got a $100,000 car, whatever it is. They get to, as Bank A that created that loan, they get to now loan out 90% of that money. Okay, so out of that $100,000, $90,000 they get to loan out. Okay, so there's $100,000 created just between banks A and B. There's now $190,000 in circulation. You with me so far? Well, guess what? This just keeps going. So now Bank B gets to loan 90% of that to Bank C. And so that 100,000 gets multiplied, 90, 80, and so on, throughout until it goes all the way down and can't do it anymore. And this is all back and forth in a closed banking system. And so what happens is when this money is created, it's depreciating the value of each and every dollar that's already out there. And so the money that you and I put away in our 401ks, in our IRA, in our checking accounts, as they create more and more and more money, that money becomes worth less and less and less. You might have heard me use this example before to just demonstrate how the dollar is losing its value. Most people have just come to expect that inflation is normal. But there were stretches of hundreds of years where there was no inflation, when currencies were tied to gold and silver, and there was consistency for many years. Even in the early years of the U.S., we went decades without any inflation. It was when 1971, when we were taken off the gold standard, that this fractional reserve thing has really gotten out of hand, because see, now they can create as much money as they want to. And then, as you now know, when they create that money, it gets multiplied through fractional reserve banking, basically times 10. And that, once again, is devaluing the dollars that we all carry, to the point where that same brand new Ford that we could have bought in 1955 for $1,600, that Ford today in 2011, we'd be lucky if we could get that for $16,000 today. So what that means is the dollar has lost 90% of its purchasing power. Now, if you would have been putting your money into silver, as an example, in 1955, silver was only 90 cents an ounce. Today, silver is $37 an ounce. So imagine if you were smart enough to convert paper into real money, silver along the way. You could have gone from, instead of losing 90% of your purchasing power, you would have gained times 40. So where do you want to have your money? Okay? If you're interested in protecting and preserving your purchasing power, you need to start putting your paper money and turning it into real money. I believe that silver has a lot more of an upside than gold does because it's so undervalued and it's being used up. And you can look at some of my other videos to learn more about the specifics on this. But I just wanted to give you a little insight. If you want to learn more, there's a lot of amazing videos on YouTube. Type in money as debt and look at this little cartoon type explanation, and it explains in great detail how all the money created that's multiplied by 10 is only the principal. They don't even create money for the interest. So how is everybody supposed to pay this back? You really can't. It's designed for default so the banks can end up owning everything. Remember, they only create the money for the principal. They never create the money for the interest. So type in money as debt. It's a real eye-opener. If you want to check out my blog, isncoinsbusiness.com, you'll see some amazing things on my blog. I've got some great videos on there and articles. And so educate yourself. And if nothing else, put some silver away. If you want to give me a call, 858-705-2487, I can go ahead and help you get a roll or two. Or if you want to have coins sent out on auto ship, collector's coins, we can get you set up to where you can turn this into a little business, help your friends and family get in a better position, and make a residual income along the way. Eric Padden, once again, thanks for your time. Have a great day, and I'll catch up with you on the next video.